Hi, I'm Duncan Edgar and I'm the Financial Counsellor here at Southcare. So today I'm going to talk about small amount credit contracts, which you may not also know as a payday loan. A payday loan is the term often used for a loan that is over a relatively short period of time, such as a few months. Originally the term payday loan was used for loans that were paid back on your next payday. They are now called small amount credit contracts and relate to unsecured loans for terms up to 1 year for amounts under $2,000. We certainly don't recommend people taking out a payday loan or short-term credit contract. The fees that can be charged on these loans are often very high, and we often see people get into a debt trap where they get into hardship paying off a loan and then need to take out further loans as a result, so they end up in this constant cycle of having to pay debts off. People are often attracted to these loans by fancy advertisement campaigns, and they can often easily be accessed online or through stores at shopping centres and the like. There is a limit to what can be charged by a payday lender, but they are still expensive. They can charge an establishment fee of 20% of the amount borrowed and a monthly fee of 4% of the amount borrowed. The difference between a normal loan and a payday loan is you pay the monthly fee on the total amount borrowed, while with a normal loan, the amount of interest you pay back reduces over time as the balance of the loan reduces. As an example, if you borrowed $1,000 over a 12-month period, you will be paying back a minimum of $680 in fees. You may also be charged enforcement costs, government charges and default fees. So if you miss a payment or fall behind with a payday loan, these fees can add up very significantly. There are a number of far better alternatives. Firstly, you can get a no interest loan. In WA you can access a NILS loan, which provides people and families on low incomes with a no interest loan that we can use to purchase things such as household items like white goods and furniture and televisions, pay for car repairs, medical equipment and school uniforms. You can also access emergency relief. There are a number of community agencies that can provide financial and material support to help people in financial crisis. This support may involve helping to pay urgent bills to avoid disconnection from services, provide food relief or help with rent arrears to stop an eviction. You can also enter into a payment arrangement. One of the main reasons to access a payday loan is to pay for utility bills or other debts. Often the best option in this scenario is when you are experiencing financial hardship, contact the service provider and enter into a payment arrangement. You can also get a Centrelink advance. If you receive Centrelink benefits, you can apply for an advance up to $1,000 depending on the benefit that you receive. Centrelink will then deduct the repayments from your future Centrelink payments over a period of time, which is usually 6 months. If you're experiencing financial hardship, you should contact the lender and explain the situation you're in. The lender is required by law to consider providing some assistance, such as reducing or postponing repayments if your circumstances have changed. If the lender will not provide assistance, then you can complain to the Australian Financial Complaints Authority, who can investigate the matter. If you believe you could never afford to repay the loan, you should seek legal advice or seek assistance from a financial counsellor or community legal centre, as payday lenders are required by law to ensure the loan is suitable and you can afford the repayments without substantial hardship. If you would like to know more information about the service that we provide or would like to make an appointment, please contact us by the information that will pop up on the screen now.